Hey guys, it's Justin. Got a great episode in store for you today. A familiar guest with a great update. What's going on in the mortgage industry, what to expect here in 2025, and how you can absolutely win. You don't want to miss this one. Stay tuned. What's up, everybody, and welcome to the Justin Ford Podcast, where I'll be releasing life-changing principles and valuable information focused on all things faith, finance, family, fitness, real estate, and so much more. Let's go! What's up, everybody, and welcome back to another episode of the Justin Ford Podcast. Super excited to be with you here again today, and I hope you've been doing great since the last episode. If you're loving the show, do me a favor. Go ahead and hit the subscribe button here on YouTube or your favorite podcast platform. And if you're really loving the show, go ahead and leave us a review. You can find us on also social media. If you haven't followed me yet, you can follow me at the Official Justin Ford. Again, at the Official Justin Ford. You can find me on Facebook, Instagram, LinkedIn, TikTok, X, and also here on YouTube. Have an incredible episode in store for you today. But before we get into that, I do want to remind you that this episode is brought to you by my friends over at Nextdoor Lending. Nextdoor Lending is a team of professionals that believe everyone should be treated as if they lived next door. The founders and team members have more than 150 years of combined loan experience, helping clients all over the country choose the best loan program to help you accomplish your goals. Nextdoor Lending is currently licensed in 26 states and has a team of over 100 loan officers specializing in helping you get the best rate and terms. And so whether you're looking to refinance your home or you're looking to purchase your next home, call my friends over at Nextdoor Lending today at 888-885-3667 or visit their website at nextdoorlending.com. And speaking of Nextdoor Lending, we actually have Jonathon Haddad, partner, president, leader, rock star, my friend, my brother, back on the show. Welcome back to the show.
Yes, sir. It's been a minute, my friend.
It has been a minute.
Yeah, lots of travel.
You've been busy, man.
Yeah, something new.
A lot of things have changed since the last time you were on the show.
Yep, thank God.
But before we get into that, I'm excited to have you on because, you know, this episode is actually airing in January, so it's Happy New Year 2025. And, you know, what's interesting is we've been having you on the show for the last couple of years, and I was thinking back to like when we first had you on, where the market was, kind of where it is right now and where we're headed. And so I'm really excited to really get into that and talk about that, because I think a lot of times people are wondering, you know, what's coming? Are rates going back down? Are they going back up? And what's exciting is, you know, with the new administration coming in, you know, I think things are really going to start to look up and look better. But before we get into that, I do want to acknowledge that last time you came on the show, you had just had twins.
Yeah.
How are the twins?
The twins are huge now, so they're about 15 months coming up.
Wow. That's crazy.
The ball of energy, as I'm sure you know, a boy and a girl.
Oh, man.
And so they've been running around like crazy.
Yep.
But they're saying words, right? And they're, I don't want to say becoming more like people. They were always people, but as a father, it's a little different now because of the fact that the rough housing starts to occur.
Oh, yeah.
Throwing them around a little bit more. And they're starting to get a little bit more needy. I'll tell you that much.
Oh, yeah.
So,
and it only progresses to more needy as they get older, even into their teenage years.
But it's been awesome, man. And we just invited our third child, so another baby girl. She's a month old.
Wow!
So the difference in dynamic is quite fascinating. But God willing, we want a couple more. So we'll see.
That's so awesome. And you know, we've known each other now, I think, for about 3 years, and to see you go from at the time you were just dating, right, no kids, to now being married with 3. I mean, it's like that. It was like boom, you have 3 kids, and that's a big. Like, that's a big transition, right? And I remember, because we have 4, I remember especially, you know, people who would have their first, right? And you didn't get to experience just one. I mean, you went from 0 to 2, right? Lot more than most can handle, right? Yeah. I remember people always saying, like, man, how can you handle 4 kids? I can barely handle 1. And I'm like, well, after the first one, it just gets easier, right? And obviously now that you guys have your third, which obviously having twins and going to your third, you've learned some things already. I remember, you know, when you have your first, you're like, oh my gosh, the kid's crying. You got to get up every time they cry.
Yes.
You're thinking, oh my gosh, I want to make sure nothing happens, because you just don't know. And then after the third, I can cry a little bit. It's okay.
Well, it's the anxiety, I think, especially for me, the first time around it, everything's anxious for you. Like every noise is new, every sound is new.
Yep.
Everything that occurs is so new to you, and you're so anxious. Baby, okay, is everything all right? So not only do you not know what you're doing, you also have this like weird sense of paranoia about everything.
Yep.
And you're all right with the third one.
Yeah.
It's just like, oh, you're hungry. All right, cool.
Yep.
Oh, you're crying. Oh, you'll be fine. All right, we'll give you a second to it. So you are spot on. It's a little bit. It's not that it's easier, because it's definitely difficult still. The difference is you just become more accepting of what's to come and more understanding of it.
And you're more experienced.
Yes.
I think of like, new real estate agents, or I'm sure you see new loan officers when they're working on that first deal or that first couple of deals. After you've done a handful, you're like, oh no, I got this. You're not so anxious or worried about specific things. You just know they're going to work out.
I love that too. It's funny. We always correlate it back to real estate analogies. Obviously, it's our lane.
Yep.
And it is true, because like with new LOs and new agents, one of the things they do early on, I'm sure you've seen it, is like they count their eggs before they hatch, right?
Yep.
I just got a client. Oh my God, I have a meeting. And you're just like, oh, here we go. Right? You've just learned to deal with it.
Yeah.
And it's not that you want to take away the excitement. It's just you learn how to navigate through those waters so many times.
Yeah. There's a saying that we have at Glover U. And so every time I go on tour, we share these. They're called Glover-isms, and one of them is actions speak louder than words, but results speak louder than actions. We're always told actions speak louder than words, and so like we're doing all these actions, and we're all busy, and like a new real estate agent, like, oh man, I'm crushing it, I'm showing 50 homes, and then they find out they're not even pre-approved, or they can't write an offer, or the deal falls through, so they get all excited because they're doing a lot of actions. But I always tell them, hey, we get hired to get results, right? So it's like the same thing. A brand new LO or a brand new agent, they're all excited, but they don't understand everything that comes after that.
What's fascinating too? I love that. You just got my brain really going about that, right? The results matter the most. That is a lot of what I've been talking about coming into 25, and I feel like you've been the same way. Just listening to you, and as you're building your team, because you scaled quite a bit, obviously, with your personal team. That is exactly the case. Like, activity's good, right? We love activity, but what are you gaining from that activity? And do you know how to actually look at your activity and see where you need help?
Right.
Like, that's where the Glover you mentioned, the coaching comes into play. And I'm just curious, like, how do you deal with that with agents? How do you teach them to look at the right activity? What is the right activity? I'm just curious.
You really have to track their numbers, because the numbers don't lie. If somebody says, hey, I'm struggling, or my numbers are down, you have to really kind of reverse engineer it to what are you doing on a daily basis, or what are you not doing on a daily basis that's lacking, or it's causing your overall production to lack. And so we have everybody do a business plan. So we just did all of our 2025 business plans not too long ago, and we say, okay, what are your goals? And then what do we do? What do we have to do to reverse engineer that down to your daily activity? How many people do you need to talk to per day? That ultimately leads you to how many appointments you're going to go on, which ultimately leads you to how many contracts you're going to sign. And we can actually track the percentage of, hey, for every 10 appointments I set, for every 10 people I talk to, I set one appointment. And so for every 10 appointments I go on, I get, let's say, 5 signed. And every 5 that I get signed, 4 close, and so on and so on. So if you really want to close 36 transactions, you have to go on 300 appointments, or something along those lines. So I think that's what it really comes down to, is what you're doing on the daily activity. And because the numbers don't lie, you can really dissect an agent's daily activity or daily routine and determine, what they need to do or what they're not doing.
You can, it's know thy numbers.
That's it.
And I love the first question you asked, because nobody does this anymore, right? When someone comes to me early on in my leadership journey, right? I'm struggling. Oh, what's going on?
Yeah.
Now when someone tells me I'm struggling business-wise, right? Not personal.
Yeah.
Hey, listen, in what area?
Right.
What do you mean? No, like what area specifically? What are you struggling in? Show me your activity.
Right.
What have you done? What appointments? How are you working?
Yeah.
You learn that as a leader too, because people aren't working as hard as they think they are a majority of the time.
Right.
And you got to also teach them how to overcome that reality of what hard work is and what effort actually means.
Yeah, 100%. So it's always in the numbers.
Always.
Yeah.
Hey, how is it not, right?
Yeah.
I mean, it's not a bad thing. I'm not saying numbers drive the results. That's not what I'm saying. I'm saying they drive the activity.
Yeah.
You drive the results.
Yeah.
So it's always about kind of keeping that separate, because I don't want people to think it's just numbers focused.
Right.
But that's the only way to actually figure out where you need to spend time and where you need to generate more activity.
Yeah, and even before, the the show, we were talking about like knowing your bottom line, right? And you said, can you imagine not knowing your bottom line? And I was on a like a call this week with a team that's looking to come over to EXP, and we were talking about, you know, how their team, they've been teaching their individual agents on their team that, hey, you guys are all business owners. Even though you work for our team, you're an independent contractor, therefore you are a business owner of your business. And I believe every real estate agent should know their numbers. And so, you know, if you don't know your numbers and you're just kind of going out there and winging it and going through the motions, you know, don't expect to like hit your goal if you don't even know what it takes to get there. And so that's like in the daily routine thing.
I love that, man.
Yeah. So the last time you also came on, you had just become the CEO of AIM.
Yes.
How's it going at AIM, man? And you've been all over the country, like crazy, doing a lot of great stuff. How's it going over there?
I love it. You know, the first 60 days were really tough. People, you know, and rightfully so, right? People don't like change. So me getting onboarded, there was so many things going on. People were upset. So overcoming that at first was very difficult up front, just mentally wise, right? So getting myself in the right mindset, attacking it head on, you know, eyeball to eyeball conversations, so many phone calls, and then just showcasing to people what I'm about, what I stand for, and what I believe in, and how much I care. That's really what's shifted the dynamic for me. And then all these new speaking engagements, so that's been new, getting into a new mindset. And the other thing too is I have like a title. And that's been very weird because people definitely are pulling at you in many different directions. So learning how to navigate those waters has been a journey, but the overall of it, I love it. I mean, I can't tell you how much energy it gives me. I enjoy the process. The only thing that's tough is the travel with the family. That can be very taxing on the body mentally. It's very draining. But just getting I never realized how much of an adrenaline rush I would get from speaking publicly. And
it's one of my favorite things to do.
And it's insane. And for the longest time, people always think like I don't get nervous. I mean, you have no clue how nervous I get. It's very intense. Like I'm very just, here we go. Oh my gosh. But it's a lot of training. It's a lot of practice. And then mentorship. I've had such great mentorship from people teaching me how to do things a certain way and how to become more elite. That's been by far the coolest thing. Everybody I talk to, they're millionaires. I mean, legitimately. Majority of the people I'm talking to at the highest level, it's multi-millionaires that have built incredible businesses. So I'm a college dropout. I'm a first generation college dropout. So for me to be able to absorb all this and then feed it back to my kids as they get older, like this is unbelievable. So I've been very blessed, man.
I love that. And just to kind of go back a little bit, you know, when you talk about the changing of a guard in a leadership position, there's always going to be that, I think that that period of time where people are going to accept you and like you, and people who aren't. You see it in churches when there's a new pastor that comes in. You see it when there's a new president that comes in, or, you know, new who, whatever, right? Because there's just going to be that. And I love what you said about, you know, I'm just going to show up and be me, and I'm going to show them what I'm all about. And you're definitely that guy, right? You're a leader. You serve, you give, and you bring change and impact. And I've been watching that journey that you've been on. And so for those that maybe didn't hear the last episode, what is AIM? Because there's a lot of real estate agents and stuff that are on here.
Thank you. So AIM is the Association of Independent Mortgage Experts.
Kind of like NAR, National Association of Realtors. Similar
to NAR in a sense. We have over 20,000 mortgage brokers that are part of the association.
And it's brokers, not like bankers or anything like that. It's a
mortgage
broker
brokers
association.
It's tied to mortgage brokers. So we talk a lot about mortgage broker market share. Look, I was in high school when the market crashed. I'm just throw it out there, right? A lot of it was thrown on mortgage brokers. All right, don't blame me. I wasn't around. I was still trying to figure out school. So a lot of that was put on mortgage brokers. Now, let's be serious. There was a lot. You were around during that time. There was a lot of things happening that should not have been happening across the board for all parties: appraisers, investors, real estate agents, mortgage loan officers, everybody. And so brokers were the ones that it got pinned on.
Oh, they did.
So for us now, it's about showcasing why we are the best fit for consumers. Our default rates are low. Everything about us stands in line with retail, if not better, when it comes to our pricing and everything else that we have for people. So our market share is growing. We just want to showcase to consumers and agents alike and loan officers that, hey, mortgage brokers, there's a space for you and a spot to help your consumers get into that home and live the American dream. That's the biggest thing for me as a first-generation immigrant. Like that's a big deal in my culture, my family. So to be able to give that back to people, I don't think people understand the value of home ownership.
Right.
It makes the most millionaires.
Absolutely.
And it's not even close.
Yeah. And, that was my journey into this industry, was being a mortgage broker, back in the day when anybody could be a mortgage broker, a loan officer, writing loans in my basement in my shorts. But, to see the industry change over the years, when one of the things that I love not only about, your company, Nextdoor Lending, but obviously even going and visiting, United Wholesale, UWM, and seeing what Matt Ishbia has created, on the mortgage broker side, because I know UWM is very focused on the broker business.
That's it. They have no other. They got rid of all other aspects of their business, and they're all in on just mortgage brokers.
Yeah.
There's nothing. The only way they make money is from mortgage brokers. And that's it.
Yeah, and to be able to even go on that, the company headquarter office tour, I was just blown away, because you have about 8,000 people that work there, and all your sales reps are all suited and booted. Everybody's in a suit and tie, and they're all on the phones every day, reaching out to guys like you who own a mortgage brokerage, looking to create that partnership. And I love how the line of it goes, because then you've got UWM down to the mortgage broker, then the mortgage broker to the real estate agent, right? And then the real estate agent to the consumer. So it's this big line of business. But then again, you obviously have explained it in the past. Touch on the difference of, because there's a lot of real estate agents that listen. What's the difference of working with a mortgage broker like a Nextdoor Lending versus going to Chase or Bank of America?
I was in retail for 6 years. Let me start there. And the first thing I want to preface on this, because everybody always thinks it's like a gut punch or they're going to attack. It's not about attacking, okay?
Right. Yep.
It's about options and opportunity. It's that simple.
Yeah.
It's really that simple to me. You have a consumer. Your consumer, pending they qualify for a mortgage, we want to get them into a house to help them live the American dream. That's a fair statement to make, right? I think everybody deserves an opportunity to own a home.
Yeah.
I don't think that's me being out of line.
Right.
As a broker, we don't have these overlays that lenders have. So what is an overlay? So for example, on VA loans, okay, there's a product that VA has called a VA Streamline.
Yeah.
So this is for a veteran that purchases a home, for example.
Yep.
They have the opportunity when they purchase a home to move into another VA loan 6 months later at a lower interest rates. Generally, it's for free or minimal cost to them. No appraisal, no nothing.
Yep.
That doesn't technically have a credit score that you need to meet.
Right.
You just have to make on-time mortgage payments.
Yeah, for 6 months.
For 6 months, that's it. If you miss credit cards, things like that, they still take care of the veteran. That's the veteran's right. They've earned that. Let's be clear.
Amen.
Now, in lenders where I was working before, we couldn't go past a certain credit score.
Yeah.
That's not a real thing.
Right.
Mortgage brokers don't have those overlays. Why? I have different options from so many lenders. I'm signed up with over 80 lenders.
Yeah.
So if somebody says, no, you can't do it, that's not true.
Right.
There's an option. And why is this beneficial? Or why does this hurt? Think about this.
Yeah.
Your client is a veteran. They call a retail lender. That retail lender, someone you trust as a real estate professional, which, by the way, some really good ones. I was retail.
Yep.
Good people, still friends of mine.
Yeah.
But they tell your client you don't qualify. Now that client thinks what?
They can't buy a
So
house.
are they going to reach out to anyone else?
No.
No. And they tell you that. Are you going to reach out to anyone else?
No. Not if I have a retail relationship.
Bingo.
Only.
But they actually qualify for a home, and then they call me and they go, I was told this doesn't work.
Right.
So that's the biggest difference. That's
huge.
real money in your pocket. Excuse my passion. You can hear it.
I love it.
But this is, people ask me this all the time, and I don't hate. I'm not upset. I'm not angry. It's just a matter of fact.
Yeah.
And on top of that, retail. Retail can also potentially use mortgage brokers, or you can use broker companies.
Yeah.
Why would they use broker companies if we're not the best fit for a consumer?
Exactly.
Because we have more options, and that's really what it boils down to.
Yeah. And again, for those that are listening,
Got me fired up.
I love
on that.
it. Hey, I love it, man. So on the retail side, just for those of you guys that are listening, and Jonathan, you can jump in here. A lot of times, like for instance, like a Chase or a Bank of America, they only have a certain product that they can offer, because a lot of times don't they hold the mortgage? They're not selling off the mortgage, and so they're
the servicer.
They're the servicer.
Yes.
So they hold the mortgage and they service it, and they have very strict criteria that it has to fit within, and it either fits or it doesn't. There is no other, hey, let me see what else I can do. Whereas coming to a mortgage broker, you might run this person through DU or take them to one place of the 80, right? And let's just say 79 of them say no, but number 80 says yes. you never have to tell the client, well, hey, we can't get you qualified, because you're searching out all your options. Because if you're going to issue a denial, or, hey, we can't get you, you've exhausted all your options.
Yes.
And that's the difference.
It's a mindset.
Yeah, it is. Yeah, for sure.
You're taking that mindset away from somebody. And that's where, look, the average consumer, okay, think about America for a second. Average household now, it's higher. You make about $77,000 a year. That's the average household.
Average income,
okay? That's the average income for a household. You're now going in, you're telling a family, so you have this hardworking family, they're calling you, you're saying you're denied to buy a home. Think about the psychology of this for a second. Right. You're denied to buy a home.
Yeah.
That hurts the soul. Anyone here ever been denied for something?
Right.
Do you want to get up and keep searching? No.
Most people know.
No, most
the average
people
person
know.
is not going to keep calling.
And look, I have goosebumps right now talking about this, because it's that meaningful to me. So don't just sit there and deny somebody. Like, give them an opportunity, and if they don't know and you're not teaching them that, hey, at least try another opportunity. Like, can you just talk to my guy or my gal? Just at least talk. I know you were denied, but just give them a shot.
Yeah.
That's where I get so frustrated, because we're missing opportunities simply because people don't know their options.
And as real estate agents, I can speak for us as real estate agents, those that are listening, that's our duty and our job, because many of the times, especially first-time home buyers that are coming to a real estate agent, are starting with us first and not a lender. Most first-time home buyers are finding a real estate agent, and then it's the real estate agent who's then pointing that person to their relationship typically. And if the relationship that they have is limited only to, a retail line of products, I love what you said. This is why, even if you have a retail relationship, you should also have a broker relationship.
Yeah, that's it. I'm not saying break it. Some really great, amazing REITs, some of the best in the country.
Yeah.
But it's not about that. It's simply, hey, just at least have a backup plan, something to give your consumer the best chance to live the American dream and gain wealth.
Yeah.
People that own homes, statistically, have a much higher net worth than people that don't. It's just a statistic. It's
Absolutely.
that simple.
Yeah. I love that. So speaking of mortgages, right? It's 2025, right? First January 2025. We've I think it was back when was it 2022?
Yeah.
When we first had you on the show, we were talking about rates are getting ready to go up, right? Things were changing. We've got a new administration coming in, right? We got a new president, which is exciting. Where do we go from here? Like, where do you see the mortgage market, first quarter, second quarter into the end of the 2025 year?
So I love it. The volatility has been crazy. It's so funny. I tell people all the time, I go, I've never been wrong this many times in my life over the last 24 months.
Yeah.
But there's been a lot of ebbs and flows. So what we've seen so much of is this. They dropped interest rates. You heard the Federal Reserve dropped interest rates. So
most people think that that's the mortgage interest rate that's dropping.
And that's the biggest misconception, because it's funny, because the news also says it, and I still don't understand it.
The news
because
says a lot of stuff.
But they're also like, they know.
Yeah.
They do. Most of them know.
Right.
So that's always shocking to me, but whatever. So when the Federal Reserve drops interest rates, they're dropping interest rates for investors and banks, not for us. Let's just be clear about this.
Right.
This is for people that borrow money at large amounts of sums, right? So if they're dropping it 0.25 percentage point, that means that whatever you're trading at as an investor, you're going to get it 0.25% lower. And in turn, that should carry over to us on the mortgage side, and your consumer in turn should get a lower rate.
Right.
The volatility we've seen has been pretty outrageous. So with Trump winning, what occurs is there was a bit of not a scare, but they were concerned about short-term inflation.
Yeah.
Now, why? Because Trump is really big on the tariffs if you're not in America, right? So he's saying, I'm going to tariff you like you're not going to believe if you're not putting your stuff here in this country.
And a tariff is basically a tax,
It's a massive tax that they're applying to either large entities or businesses. So if there's a large business that's getting their products in another country, not in America, he's saying, I'm going to tax the hell out of you in order for you to continue to do that. So when that happens...
Or do all your business here in
the United States. Now, technically speaking, it's going to be more expensive to do it in the United States. So when investors see that, their anticipation is, okay, if their prices go up, they're going to have to charge it, these businesses, to The consumer.
Yep.
Therefore, inflation short term may be higher than we want it to be.
Right.
However, long term is where they are seeing benefits because of Trump being the business person that he is.
Right.
They don't anticipate him wanting to keep interest rates high because of the fact of how he does and anticipates business. So the anticipation is Q2 of next year is when we start to see it.
2026.
2025.
2025.
Yeah. To Q2 2025. However, all the large investment banks that predict interest rates, they've gone, they still are going to go down compared to where they are, but they're up a little bit higher than what they thought they were going to be.
Yeah.
You're still looking at in the high 5 area.
Yeah.
The other thing that's coming back that you'll see to come back is adjustable rate mortgages, which I have one personally, an adjustable rate mortgage.
Yep.
That'll finally come back where we can give consumers even better interest rates and really good opportunities.
Yeah. Yeah. So I want to pull on two things that you just said. And so we'll start with, where do you think rates are going to go? Because one of the things that we always hear as real estate agents is, I'm just going to wait for rates to come down. Mm-hmm. And what we always like to say is, well, that may not automatically mean that you're going to save money, because you might have to pay more for a house, like we've seen in the past where you got, multiple offers coming in. You might have to pay 10, 20, 30, 40, 50,000 over the asking price. So really, we always say, well, listen, now is actually a great time to buy, because you can always refinance your mortgage, but you can't renegotiate your purchase price. So a lot of people that are maybe on the fence right now saying, well, I'm just going to wait. Let's say 2026, when things start to come down, do you ever see interest rates going back below 4% into the 3s and even 2s?
I think adjustable rate mortgages, you will see that, to be honest with you, like the 399, 3875, you'll see on the adjustable. On the 30-year, to get that low again, I really don't. At least not in the next 5 years, personally speaking.
Yeah.
I do believe there will be opportunities, but it'll be way down the road, and it's going to have a lot to do with economical decisions that occur, but global economic things that happen. But no, I don't think you will see that. I do think the adjustable rate, but I want to say something.
Sure.
That's why I smiled.
Yeah.
So maybe we have a little bit of an advantage, but clients tell that to us too.
Yeah.
And it bothers me when clients say that. And here's why. What I always tell clients is this. So don't forget, I do get their bank statements up front. And when I get bank statements, I go through all your expenses, and I see anything that you're spending on a daily basis. So my favorite's like looking for Starbucks. I look for McDonald's. I look for things, gas station fees.
Yeah.
When clients tell me I want to wait for rates to go down, I always reply with, hey, may I just ask why your first thought is you want to wait for rates to go down, but not I want to budget better? I always ask them that. And they're always silence on the phone.
Yep.
It's always a little awkward. And then I just tell them, hey, listen, you've racked up, just so you know, 2 months bank statements on Starbucks alone, $410 in the last 2 months.
Yeah.
McDonald's, gas station, 7-Eleven. I go through it. I go, you've spent $500 over the last 2 months. It's $250 a month that you've spent. Your rate dropping to what you think you want it to drop is $250 a month.
Yeah.
So you can own a home for that $250. You just have to budget better and own an asset that appreciates.
Right.
Like, that's a real statement. I can't tell you how many times I've overcome that objection by simply just being logical with the consumer.
Yeah.
I want rates to go down. I want you to budget better.
Yeah.
Which one would you prefer?
Right.
So just a thought for people. Sorry, just not to get too dialed into it, because it's real.
I love that, because I would say this, even to real estate agents out there. Is your loan officer that you're working with saying that to your client, if they're thinking about purchasing, or are you saying that, right? Now, obviously we're not privy a lot of times to the bank statements. Yeah. However, I love what you said, because people are just stuck on the rate so much. Because I remember when you spoke to our team, I think it was maybe last year, where you said, you had a client where their rate was going up quite a bit, but then and I think it was maybe like a cash out refinance.
Yeah, we
something.
paid off their debt. Yes.
But then you pay off this, and this. And even though your monthly mortgage payment's more and your interest rate's higher, I think you saved them like $700 a month on everything else. And it's just like, that's a no-brainer.
Well, it's the effective interest rate. But Justin, it's so much deeper than that. Like, I don't like when people lie to themselves.
Right.
And I do it too, by the way.
Yeah.
And it bothers me. So, for example, you know what? I'm going to start getting on more podcasts when I get in better shape.
Right.
I'm going to start dieting more after the year ends, New Year's resolution.
Yeah.
I'm going to do, no, you're not.
Right.
You're going to do it. When you're going to do it, it starts effective right now.
Right now, if you're going to do something, do it now.
Even your budget.
Yeah.
Stop telling me that rates are going to be, well, when rates drop, then I can do it. No, stop.
Right.
Stop pretending that you don't spend extra when you shouldn't. Stop pretending that you shouldn't be more disciplined when you should.
Yep.
Let's start there. And then let's not pretend that owning a home isn't in your best interest long term.
Right.
So that's truly what I dial into, but it does take somebody with a lot of finesse.
Yeah.
And it also takes a really incredible agent that's willing to have tough conversations with somebody, which I know you're always willing to do.
Yeah.
But it's teaching these agents, teaching these LOs how to have those kinds of conversations with consumers.
I remember when Joy and I purchased our home back in 2020, and it's coming up on 5 years. It's crazy to think. But I felt like we were late to the party, meaning I thought we were buying, and we got a great rate.
We had a
2.99 rate, but we thought like, man, I'm purchasing this house. If I would have bought it 2 years ago, it would have been, honestly, from the time I bought that house in 2020 until this year, it's gone up almost 300,000 in equity, right? And it's like, but again, it's these limiting beliefs that people have is like, oh, I'm too late to the party, or, I don't want to buy because I want prices to come down. Well, prices are probably not coming down for a long time. I mean, they might fluctuate, but, and you can step in and correct me if I'm wrong on this, but the only way prices come down is inventory goes up, right? And if rates come down, I don't know. I think prices are going to be pretty strong for a while.
So everybody's predicting it. When I say everybody, let me be very clear. I'm talking Goldman Sachs. I'm talking Fannie Mae. I'm talking the MBA, Mortgage Banker Association.
Yep.
When I say everybody, I'm talking your largest investors that put in the most amount of money into real estate.
Yeah, not your uncle who thinks he knows everything.
It's spot on.
Yeah.
And again,
the people who really know.
And decisions are risk-based. Yep. What's the amount of risk you're willing to take? Is it a risk? The answer is yes. Yeah. But if you look at data, make your decision the best you can based off the data you have.
Right.
It's all saying they're going to go up prices a little less than normal. So usually they anticipate about 3.5% across the country. Yep. They're thinking 2.5% appreciation of home values still in 2025. Still,
but
no decline.
But if you rent a home, how much are you appreciating?
I believe it's zero. Still,
exactly.
I think you're losing quite a bit on the rental side. Let's be clear. We're not saying renting's bad. You have to do that.
You got to start somewhere. But if you have the opportunity and you have the chance, now's the time to purchase. The longer you wait, like you said, the more you're losing out on the potential. Like if my wife and I, Joy and I, would have waited to purchase, now we have, like you said, an asset. Our net worth went up, $300,000 just by buying a house. And it's, before that we were renting. We didn't have a net worth from a house, right? And so it's definitely time, right? If anybody's looking.
It is. Yeah. No, it was good. It's obviously my energy around this topic is very high.
Bro, that's why you're a beast, especially in this space. Mm-hmm. So speaking of this space, another change or another thing recently happened. You guys at Nextdoor Lending were recently acquired by
NerdWallet. Yes, it's official.
Yeah. So who is NerdWallet? You were telling me a little bit about that. Mm-hmm. And then what does it mean for Nextdoor Lending? And then where do you guys see yourself here going?
Yeah. So one of the things that is a little different because I am corporate again from that perspective. So I have to be cautious on what I can. Shout out to our NerdWallet communications team. You guys are amazing. So we were acquired. NerdWallet is a very large entity.
Billion dollar
entity. Yep. They're a publicly traded organization. Yep. And they have very great brand recognition and so many different verticals and things that
in the financial space.
Yeah, in the financial sector. And they're truly helping consumers just help them, give them information to help make a great decision. Yep. So we were acquired by them. It was an awesome opportunity. It will open up potential doors for us as we continue to build and grow out and learn what it's going to look like long term. Yep. But the biggest thing for us from a synergy perspective is we were very aligned when it comes to the consumer. And a big thing for them is brand recognition and your reviews. They love the fact that we had 1,200 five-star Google reviews.
That's amazing.
And it's all in line with their brand and what they stand for. And we're really excited for what this could potentially mean for so many other people down the road.
Yeah, and it gives you more opportunities to serve more people on a much larger scale.
It does, and it is a little. It gives you a little weight, right? It definitely carries weight because now going into a room and people know it's a conversation changes, and it's nice. It feels good to have that kind of recognition. And now it's like, what do you actually do with it? How do you build it? How do you maintain everything we've done and still have that? Now you have a bit of corporate backing behind you. So we're going to see a lot of what it's going to look like over the next couple of months.
That's exciting. Mm-hmm. And speaking of NerdWallet, you were sharing with me before we started this morning that it started right on a spreadsheet. Right?
So
NerdWallet started on a spreadsheet like this guy. You want to just share the story?
It's a
pretty cool story.
Well, sorry guys, if you get upset for sharing this. So I asked the founder, I said, how did you start this? Just this like amazing, it's now turned into this. And he said, well, my aunt was trying to get credit cards back in the day, like I think 20 years ago, whatever it was. And she had all these different options and she didn't know what to do. So I was good in Excel. So she gave it to me and I put all the options on an Excel spreadsheet on pros and cons. And then she loved it and it circled around her office where his aunt worked. And then it blew up. Yeah. And it literally an Excel spreadsheet of credit cards and what to do and what to buy or which one to get. Yeah. Pros and cons exploded and turned into a $1 billion organization. How crazy is that?
And I love that you shared that with me because, a lot of times people think when they start off doing something, like I guarantee that guy did not create that spreadsheet thinking we're going to create $1 billion company with this. It was like, I just want to help. I want to make a difference. I want to help. I want to, give my aunt, some help here, and then boom. And I say all that to say is because you just never know what you're doing and how you're serving and how you're helping. You never know what that can turn into.
And he's the nicest human being.
That's awesome.
Like it's so cool. And you could tell like the guy's so down to earth. It's unbelievable. Yeah. And that's exactly it. He's just like, it turned into this. And he's so grateful and humble and I am very excited to keep building this relationship.
I won't lie. That's awesome. And so what's ahead for you personally, 2025? I know you got a lot going on. You got 3 kids.
Yeah.
You're CEO of AIM, president of Nextdoor Lending, still have a team, right? Mm-hmm. And then and now the obviously acquisition from NerdWallet. What is your big focus in 2025? What is the thing that you're really looking to accomplish? And then I'll ask you this, and I don't know if you do this or not, but what is your word for 2025?
So I love this. So I want to give you my heart on this one because I want people to really know. My life is very chaotic. And by chaos, I mean, it doesn't stop. It is from the second I wake up and truly until midnight every single night. Yep. And I try to get in as much as I can. And my wife and I talk a lot because it's very hard, straining on us and the family and everything else that I'm doing. 2025, I'm doing and building my calendar around the things I want to do and I love. I love that. Everything else I'm getting rid of. And I need to learn to let go. I need to learn to delegate. I need to learn to empower and trust people more. So for 2025, that's what you can expect from me is me doing what I love the most. And when I'm doing what I love the most, it helps the people I love the most. And that's me. I want to be speaking in front of people. I want to be coaching people. I got to make sure I'm in the gym consistently. And the only way I can do that is to get everything else off my plate. So clear my plate, focus on what I love is my focus for 2025. And I'm going to do it. Yeah. My word, it's funny you asked. So it's going to be an acronym. Yeah. All of next year. It's going to be an acronym. And it's something that I'm building out. And I wasn't sure, sharing it and going through it, but it's called ACTA. So like act a fool, whatever the case is. But ACTA. A stands for activity on this one. C stands for consistency. That's your calendar, what you're putting in, what you're doing. T stands for training. Like, are you getting trained? Are you training people from that perspective? And then the A stands for accountability. I love that. So really, really simple. ACTA is my entire thing. I'm actually building each quarter because there's 4. Each quarter I'm doing a keynote around each one. Yeah. So like activity, this is like a baseline for your life, right? Activity means what are you focusing on? Like what are you actually doing that's making you more active, that's putting you in front of more people? Like what does activity mean for you on a weekly basis? Yeah. So keynote around that. Consistency. What are you putting in your calendar that you're doing every single week like clockwork and not skipping? Right. That's a big deal. That builds habits. That builds consistency. So that's another keynote from that perspective. Training. Are you training people or are you getting trained? What's that look like? Keynote. And then accountability. Are you holding yourself accountable? And if you're not holding yourself accountable, are you finding someone else to hold you accountable? Right. So a keynote for each of those, that's kind of my whole premise for 2025. ACTA. Yeah. I love that. ACTA. And then you can build so many play-ons from it. Act a fool, right? Yeah. Act a nut. Yeah. So I love that. That's my thing.
So solid.
Yeah. I just finished doing it last week, so your timing is impeccable.
I love that. I love that. Now, if someone wants to, like, let's say they're listening, because if you're listening and you're a real estate agent, and you've kind of heard the mortgage broker conversation today, maybe you're working with, a retail lender. Again, there's a lot of great ones out there, but you really understood what we talked about this morning. How can a real estate agent find a good mortgage broker in their state? Does AIM have like a way to recommend?
We have opportunities for people left and right. You can email me directly, Jonathon at aimgroup.com, JONATHON at AIME, AIME group.com.
Yep.
I can get you connected, or mortgagematchup.com is another opportunity that you have as well. So easy opportunities to at least link up, find somebody, at least have a conversation.
Yeah. And if, obviously you go on, let's say Mortgage Matchup, and you got a ton of options, email Jonathon and ask him for his recommendation. And he will put you in touch with a mortgage broker in your state, in your community, because he's connected to somebody in all 50 states. And that will really be able to help you. And then on the lending side, obviously, I know you have a whole team that's kind of handling the transactions. If somebody's listening right now and they want to maybe have that conversation of, purchasing or refinancing, how can they get a hold of your team specifically?
So they can email us directly. Yep. It's team nextdoor at nextdoorlending.com. Team nextdoor at nextdoorlending.com, spelled exactly how it sounds.
Yeah. And again, this is who we entrust, guys, with all of our buyers with Nextdoor Lending. And they'll take great care of you if you're listening and you want to purchase a home, you want to refinance your home, you want to just have questions answered, because a lot of time, or if you've been denied by, another bank or another lender, it doesn't mean that you're completely denied. And I will say this, if Jonathon's team can't get it done, I'm just letting you know it can't be done, because they go above and beyond, and they do everything that they can, not only to ensure you get your loan, but you've done that for us and our team. And so we appreciate you, and we're excited to do some big things with you in 2025 and beyond, and continue to see you soar, brother.
Thank you. You as well.
Thanks for coming on again, man. Appreciate you so much.
Thank you.
Guys, if you loved the episode, or if you heard something great here, share this with somebody. Share it with a client. Share it with a friend, a colleague, another real estate team, agent, or somebody that you know that you think would really benefit from this. We talked about a lot of great stuff here, and we're excited where the market is heading in 2025 and beyond. And before we wrap up today, I do want to remind you that this episode is brought to you by our friends over at Nextdoor Lending. Nextdoor Lending is not just a sponsor of our show. As I mentioned, this is our go-to lender. We entrust all of our buyers with Nextdoor Lending. They do a phenomenal job. They have over 1,200 5-star reviews, a perfect Better Business Bureau rating. And so if you are a consumer and you are looking to buy a home or refinance your home this year, call my friends over at Nextdoor Lending. If you're a real estate agent looking to partner with a great mortgage broker, call my friends over at Nextdoor Lending. And if you just have a consumer question, or again, you're a real estate agent, you want to learn how you can partner with the broker world, call my friends over at Nextdoor Lending today at 888-885-3667, or visit their website at nextdoorlending.com. I want to wish you a happy new year. I hope you have an incredible 2025. We're here to help you. Feel free to reach out anytime. You can email me, Justin at justinfordteam.com. You can also message me on any of the social media platforms. You can find me at the official Justin Ford. Go ahead and hit the subscribe button here on YouTube or your favorite podcast platform. And I'm going to leave you with two things like we always do. Number one, it's not how you start. What matters is how you finish. And number two, with God, all things are possible. God bless you guys. Thanks for tuning in, and we'll see you on the next one.